Welcome to the Deep Dive. Our mission here is to take the week's most critical reporting, and for this dive, that's the latest sources from Addis Fortune, Ethiopia's largest English weekly. We want to distill it all down into the crucial insights you need. We're looking for, the structural forces at play, the human stories behind the numbers, and those moments where policy just slams into reality.
And this week, what the sources are really showing us is a picture of, stark contrasts, almost irreconcilable. On one hand, you have this incredible, record-breaking private financial success, just a true masterclass in capital efficiency. But that's existing right alongside these severe, pervasive bottlenecks and, frankly, a surging cost of living that's hitting millions of people every single day.
That tension is really the core of what we're looking at today. We're going to explore three big themes. First, the stunning performance of the nation's leading private bank, Awash. Then we'll shift to the grinding administrative and financial pain points for citizens, whether they're trying to get a passport or just afford cooking oil. And finally, we'll dig into some high-stakes government interventions. These are policies aiming to reshape agriculture, road safety, and the struggling leather industry. So let's jump straight in with what looks like a major financial triumph.
Absolutely.
The recent shareholder meeting for Awash Bank, it seems to have confirmed what many suspected. They are the undisputed leader in private banking. The numbers are just astronomical.
They really are.
We're seeing gross profit vault by an astonishing 137%, up to 25.7 billion birr, and total income, that hit 52.25 billion birr.
It's that percentage jump that really grabs you. The bank's pre-tax profit margin was nearly 50%. And this profit growth rate was almost double the entire industry's average. The industry average was, 32%. So they're not just growing, they're outperforming on a massive scale.
So how did they pull this off? Especially when so many other sectors are really struggling. What was the secret sauce here?
Well, if you look at their strategy, it boils down to two things: diversification and a real mastery of foreign exchange operations. This is the real insight from the sources. Awash mobilized over $2 billion in foreign currency.
$2 billion?
$2 billion,
Yeah.
The highest among all private banks. And that just supercharged their non-interest income through remittances and trade finance.
Wow. $2 billion is a massive figure, especially in an economy where, foreign currency scarcity is this chronic, stifling problem for almost everyone else. Does this success point to some kind of structural advantage? Or maybe a unique approach that let them capture so much of the available FX?
I think it points to excellent management capitalizing on existing gaps. While other banks were maybe too reliant on traditional lending, Awash diversified. They used their massive retail network to just sort of vacuum up remittances. It's a pure example of capital efficiency meeting a very sophisticated understanding of the market.
And the balance sheet reflects that strength. Total assets swelled by 57% to 442.6 billion birr. Deposits soared by 47.2% to 331 billion. That's just huge growth.
But, and this is where we get the first hint of the broader economic uncertainty, despite this huge influx of capital, the bank maintained a distinctly cautious approach to lending. Their loan-to-deposit ratio was conservative, only 61%.
So they're taking in all this money, but not lending it out as fast as their peers.
Exactly. Their loan growth was 20%, which actually underperformed the industry average of 27%.
Wait, that doesn't add up. If they're the most profitable and the most capitalized, why aren't they aggressively lending? What does that conservative number tell us?
It tells us that while the bank is making record profits, its management views the external lending environment as just too risky for aggressive expansion. They prioritized liquidity, they kept strong risk buffers, they held onto capital instead of risking it on loans in a high-inflation, volatile market. It's smart, cautious governance, for sure, but it's also a pretty sobering commentary on the perceived risks outside the bank's own walls.
That's a powerful connection. Their paid-up capital climbed to 27.9 billion birr, 4 times the industry average, and their return on equity was nearly double. So they're just doing more with less risk.
And it's all built on converting scale. They have the broadest retail footprint, 989 branches serving almost 15 million depositors. That massive base, even though the average deposit is only around 24,000 birr, gets effectively converted into transaction volume, especially with mobile leading the digital channels. It's a highly efficient system, right at the top of the financial pyramid.
Okay, so let's pivot entirely now. Let's move from those pristine balance sheets of Awash Bank down to the street level, where the contrast is. Well, it's dramatic and it's painful. The paper described the scene outside the Immigration and Citizenship Services Office, the ICS, on Churchill Avenue. Hundreds of people, sleeping outside, waiting.
Hmm. That image alone, people speaking Afiana Romu, Tigrinya, Somali, Amharic, all just waiting. It captures this immense pent-up demand for migration, likely driven by economic strain. It really shows a severe failure of administrative access.
And we have a case study, Mikdays McConnon, a 24-year-old hairdresser. She traveled 160 kilometers. She saved 5,000 birr just for the application, and then had to pay another 1,000 birr to a neighbor just to fill out the form correctly. And after waiting 4 months for the passport, she gets there to collect it and is hit with an unexpected fee.
Right, the 100 birr fee just to receive the document. The Director General, Salamawit Dawit, told legislators this is collected by the ICS Workers Union for handling security items and, photocopying.
But here is the truly staggering part. Critics point out that because the ICS issued over 500,000 passports in just the first quarter, that means the Workers Union generated no less than 50 million birr from this unofficial fee.
50 million birr flowing into an agency's union, which critics claim isn't subject to formal public audits. That figure alone just raises huge transparency concerns. It looks less like an admin fee and more like a massive, unauditable revenue stream generated purely from institutional backlog.
And the bureaucracy is crippling. There's this farmer, Mamoshina, who spent nearly 30,000 birr, an astonishing sum, on travel, food, and hotels, just seeking service in Addis Ababa because the closer regional offices simply failed him.
And that anecdote just speaks volumes about the strain on these regional systems. The deputy director, Bakila Mezgebu, he accepted the rebuke, pledged new branches. But the immediate pain is real. What's frustrating is that he also noted 95% of applicants fail to show up on time, which swells the backlog and creates this opening for intermediaries.
For people charging illicit fees for appointments, right?
Exactly, leading to arrest. But the former state minister, Asej Getachew, he argues the core problem is institutional. The whole system is just trapped in protocols drafted 10 or 15 years ago.
It's unable to handle modern demand.
Which links directly to our next crisis point, the surging cost of cooking oil.
Right. Speaking of friction, let's talk food prices. Official data says 10.2% food inflation, but the IMF reports a 13% jump, and the reality on the ground feels even higher.
It's the speed of the price spike that is just shocking. We're talking about Viking palm oil surging 36%.
In just 7 days.
In 7 days. From 1,100 birr to 1,500 birr, Omar oil jumped 18%. When you see a spike like that, it forces these immediate drastic changes in behavior.
Like the day laborer, Tassima Badasso, who now boils potatoes with salad instead of frying them. Or the housewife, Fikirta Tilahun, who scaled back to buying just 1 to 3 liters. And even restaurant owners like Pegas Burhain are switching to cheaper, unpurified oil just to maintain their margins. The whole food chain is reacting to this shock.
So the obvious question is, what's causing it? The Trade Bureau blames speculation and hoarding. But distributors, like Hamdan Mohammed, they point the finger straight up the supply chain. They blame importers for issuing invoices for a much lower amount than the actual sale price.
To reduce their taxes, right. So the importer legally lowers their tax burden, but then the distributor is forced into non-compliance with the Revenue Bureau when they try to invoice for the true sale price.
Exactly. It's a massive breakdown in the financial mechanism itself. It's the same kind of systemic rot we saw with the passport fees.
It all connects.
It does. The economist Getachew Alamu, he attributes this crisis to import reliance, unpredictable government policies, and there it is again, the tax authorities' outdated system. When the underlying protocols are stuck 10 or 15 years in the past, they create friction, cost, and opportunities for evasion when they meet modern pressures.
Okay, let's shift now to some high-level policy interventions. The government is trying to drag these struggling sectors into the 21st century, often with some pretty sophisticated solutions. Let's start with road safety. The Ethiopian Road Safety and Insurance Fund Service, or ERSIFS, is proposing a regulation mandating GPS-enabled speed-limiting devices on almost all vehicles.
The goal itself is excellent, right? Combat speeding, the leading cause of traffic accidents. It's a high-tech solution to a deadly problem, but the implementation starts with the most vulnerable: commercial transport, taxis, and minibuses.
And non-compliance means no annual inspection certificate and fines up to 3,000 birrs. That's huge financial pressure. Taxi association leaders, they support the safety goal, but then you have drivers like Tikistebron Semre, who already takes home less than 500 birrs a day. A high mandatory cost for a GPS system could cripple him.
And that's before we even get to the technical reality. A mechanical designer, Abby Elaine, warned that these devices have to be adaptable to unlevel roads. Addis has steep hills. You risk engine damage otherwise. And maybe even more critically, a public health expert, Teferi Abegaz, noted most of these commercial vehicles. They're just not computerized to handle these advanced systems effectively.
So the policy is high-tech, but the vehicle fleet is low-tech. It's that classic infrastructure gap again. Let's look at another one. The collapsing leather industry. The Minister of Industry is drafting a regulation to suspend the export of raw leather to revive the domestic tanning industry.
Which has shrunk dramatically from 35 companies down to just 7.
Yeah.
So this ban feels drastic, but maybe necessary given the hemorrhage of value. Ethiopia loses over 240 million square feet of leather each year, valued at about 1 billion birr, to contraband and spoilage. And export earnings have plunged 70% in 5 years.
The head of the Leather Industry Association, Degnashu Abebe, supports the ban. He notes the decline in quality is immense, with 80% of low-grade leather coming from poor animal treatment before slaughter.
But, and here's the connection to the broader structural problems. Technicians argue the core problem isn't just the exports, it's the lack of infrastructure and support at the very bottom of the value chain. Poor waste management, no support for collectors. It means only half the annual production ever even reaches the tanneries.
So the problem is fundamentally about logistics and management, not just where the raw material is shipped. Okay, finally, let's turn to agricultural transformation. The ATI's ACC2 plan, backed by $128 million in international funding. This is an ambitious effort to form 50 new farmers' production and agribusiness companies.
This is a sophisticated shareholder-based model. It's designed to move agriculture from subsistence to a commercial scale. Farmers become shareholders by contributing land, and these new companies handle the entire value chain.
It sounds great on paper, a modern corporate structure for farming, but there's massive skepticism on the ground. A veteran farmer, Gabru Tefes, who sometimes loses over 100,000 birr to market swings, he remains very cautious.
And his core question, which really echoes everything we've seen today, is simple. What about the infrastructure? He says fertilizer prices and late deliveries are still the major physical bottlenecks. No corporate structure can magically fix that if the roads are poor or the supply chain is erratic.
And an expert from Gondar University, Yemenjis Tesfahan, she confirms that reality. Commercialization is complex, it's hindered by land fragmentation, poor market linkages, lack of infrastructure. She argues clustering is vital to prevent products meant for export from, and this is a direct quote, falling apart before they even reach the market. The foundation, once again, is the weakest link.
So when we synthesize all these reports, that tension is just unavoidable. We've seen clear evidence of massive capital efficiency in the private banking sector, a world-class performance. Yet the essential public mechanisms meant to support commerce and citizen movement passports, tax systems, logistics, are demonstrably failing under the strain of outdated systems.
And when we look at the government's attempted fixes in agriculture, roads, safety, they all involved sophisticated, often tech-driven solutions. GPS speed limiters, complex shareholder farming ventures, but the sources repeatedly point to the same fatal flaw: deficient physical infrastructure, poor roads, non-computerized vehicles, logistical gaps.
Which leaves us with a question for you to mull over. Can these highly sophisticated, technology-driven policies truly succeed and drive widespread, equitable growth? If the essential physical foundation, the roads, the power supply, the tax invoicing systems remains chronically underdeveloped or trapped in protocols drafted 10 or 15 years ago.
What foundational infrastructure upgrade is most urgently needed to unlock the financial potential we saw in the banking sector across the rest of the economy? It's a question that connects that queue on Churchill Avenue directly to the policy decisions at the highest level. Thank you for joining us for this deep dive into the stories defining Ethiopia's economic journey. We'll see you next time.